Cryptocurrency has already shown the potential for unimaginable returns over the past few years. But now with the rise of crypto savings accounts, you can earn up to 10% interest on the coins that you already have. And even for those that aren't yet invested in crypto, some accounts allow you to deposit your money in US dollars and earn interest in dollars without ever having to worry about buying and selling crypto yourself. But how do crypto savings accounts work? What are the risks? And should you be putting your money in them? I'm Bradford, the Penny Pincher's Guide to Personal Finance. First, give the video a like, and let's talk about what a crypto savings account isn't. So the name is actually a bit of a misnomer because a crypto savings account isn't actually a savings account and it shouldn't be treated as such. A traditional savings account like what you get from your bank or local credit union has a ton of internal safeguards and government regulations that protect your money. So a typical bank is going to have internal protections that protect it both from criminal theft and from employees embezzling your money. But the single biggest difference here is that a regular savings account is going to have FDIC protections. It stands for the Federal Deposit Insurance Corporation. And that means for every US citizen that has their money deposited in a US bank, up to $250,000 of their money is protected no matter what. So even if the bank goes completely under and that money just disappears, you are guaranteed by the government to get up to $250,000 back no matter what. This really does matter because if you're like me and use your savings account to hold your emergency fund, you place the priority of having stability and security of your cash when you need it much higher than the ability to earn interest or great returns on your emergency fund. Instead of viewing a crypto savings account as a savings account, you should view it as another type of investment because of both the potential rewards and risks associated with it. So if a crypto savings account isn't a traditional savings account, what exactly is it then? So what a crypto savings account does is when you deposit your tokens or the sum that allow you to deposit cash, they're going to take that money and they're going to lend it out at a relatively high interest rate to other people that want to borrow those tokens to be able to buy and sell and reap the rewards of the volatility of the crypto marketplace. While this is similar to what a regular bank will do when you deposit money and then they will lend that money out and give you a very small percent interest of what they are making, the difference here is that this is much more akin to private lending. And the reason that private lending has the much higher interest and returns as compared to traditional lending via banks is because the much greater risk that is associated with it. Private lending lacks most of the traditional safeguards that come from both government regulation and traditional banks. Because of this, you expect to get a much greater return on your money due to the greater risk that you're undertaking. And this type of mentality should be exactly how you're reviewing any sort of crypto savings account that you are putting your coins into. So aside from lacking FDIC protection, what are some of the other risks and negatives that are associated with crypto savings accounts? Unlike traditional savings accounts, every time you withdraw money from your crypto savings account, you're going to have to pay transaction fees. Now, whether this is a fixed rate or if they just have a fixed dollar amount associated with whatever type of cryptocurrency you are trading, this is something that you need to take into consideration. Even though the percentages are generally very low, it does take a bite out of the profits that you would be experiencing otherwise. Another thing to consider is that with the more popular coins like Bitcoin and Ethereum, it actually works in an inverse way to what you would experience with a regular bank. With a regular bank, the more money you put in, generally the higher interest rates you would earn. With crypto savings accounts, actually, you're going to get the most interest rate on stable coins. Whereas if you have a large amount of Bitcoins deposited, you're actually going to get lower and lower interest rates with the more amount of coins you have. While the relatively high threshold where the diminishing interest rates starts to go into effect won't affect most newer investors, if you are heavily invested in cryptocurrency, this is something that will definitely take a bite out of your profits and make you reconsider whether crypto savings accounts are worth it in the first place. Another thing to consider that deals with the general volatility of cryptocurrency in general is that the interest that is paid back to you is going to be paid back to you in the same type of coin as that of which you deposited. So if the coin you're invested in takes a major drop, it could completely wipe out any interest that you had earned in the first place, effectively making it a waste of time for you having deposited your money in a crypto savings account, and you could have been better off just investing that money someplace else. Another issue to consider when putting your coins in a crypto savings account is that you are actually required to transfer your private keys to that crypto savings account company. Now, while a lot of the better companies, they tout the really high security measures that they use to protect your coins and the keys associated with them, ultimately you are still required to transfer your private keys and ultimately the control of your money to somebody else in order to reap the interest that they are willing to pay you. And the last thing to touch on with the crypto savings accounts is that even though most of the companies are going to tout the very high levels of insurance that they use to protect your money from theft or embezzlement, when you go and read the fine print, you're going to see that that is all it protects it against. If the company goes under, or if they have a bunch of people that default on their loans, you stand a good risk of never getting that money back if their systems of collecting collateral fail. So just understand that the insurance they're talking about does not protect you from defaults on loans. It only protects you in the majority of cases from criminal commercial theft and if employees embezzle funds from the company itself. So reading the fine print is extremely important, especially in the crypto space. Now with the negatives out of the way, let's talk about the positives dealing with crypto savings accounts, and there are definitely a lot that make it very appealing for certain people. The first thing you should consider is the astronomical interest rates that are offered on these crypto savings accounts that easily beat by 5 or 10-fold the interest rates that are offered at traditional savings accounts and even high yield savings accounts. Another thing to consider is that for the majority of the accounts out there, the highest interest rates that they offer, the ones that get you close or actually into the double-digit interest rates, are going to be on stable coins. So if you really are a big investor in cryptocurrency and you like to have a sizable reserve so that way you can go out and buy more coins when the markets dip, as they inevitably do just to the general volatility of the crypto space, having a large amount of currency in stablecoin is going to get you the greatest returns for your money. So if you're waiting for that next dip to go and buy while the market's on sale, this is a great way to park your money to be able to generate extra interest while you wait. Another great perk of the crypto savings accounts is that for the accounts that allow you to just deposit money in cash and get your interest paid back in cash, this is a great way to just dip your toe in the water to the cryptocurrency space if you aren't currently invested in there. So if you don't want to go and have to learn all the ins and outs of how the transaction fees and how to buy and sell on Coinbase or any of the other markets for cryptocurrency, this is a way for you to start generating some of the returns that the crypto space offers without having to go and get all the head knowledge that is associated with the general buying and selling of different crypto coins. And a final point for the positives when it comes with the crypto savings account is that now is honestly probably the highest interest rates that you're going to see, and is a really good time to actually jump in and get those extra high interest rates that are being offered. Because as cryptocurrency becomes more widely accepted and is actually used in everyday transactions, people are going to be less likely to accept the extremely high interest rates to be able to borrow and invest that money on their own. And the interest offered by these crypto savings accounts is going to start to decline. It should much more closely resemble the interest rates that are offered by traditional banks. So when does putting your coins in a crypto savings account make sense? First, as with everything in the crypto space, you shouldn't be investing any money in cryptocurrency in general or in crypto savings accounts that you are not willing and able to lose. Because of the volatility associated with cryptocurrency, it is still very much a gamble. You should treat it like going to Vegas and don't put your emergency fund or stuff that you really need to have at a moment's notice in a crypto savings account. Crypto savings accounts are good for somebody that is new to crypto and wants to dip their toe in the water without having to learn all the ins and outs of buying and selling cryptocurrencies if they can find an account that allows them to deposit US dollars and earn their interest in US dollars. And a third category that would make you a right fit for using a crypto savings account is if you are a buy and hold investor. If you have a bunch of Bitcoin or any other coin and you want to buy and hold it for the long run, putting it into one of these crypto savings accounts to be able to generate extra interest while you're just holding it is a good way to maximize the returns that you're going to see over the long run. Just know that this does take on another level of risk beyond just simply being invested in the crypto space because of the risks that I mentioned earlier in this video. Well, with all that information on the table, please give the video a like if you got something out of it. And I'd love to know if you're thinking about putting your money and your coins in a crypto savings account down below. Thanks for joining me today, and until next time, just remember to pinch a little. Thanks for watching, and if you liked this video, make sure to check out the video that's on the left-hand side of your screen.
Don't forget to subscribe if you'd like more great content, and to support our channel.